Assalamualaikum and good morning everyone. Welcome to our presentation for public announcement video PSA titled Money Laundering. My name is Mikael bin Ami Imran from Group 28. All of our members that are involved in video production are namely Felicia, Nur Sadatul Izzah, Navina, Engkayu, Kaiserin, and Dian Akila. While the members who will be presenting the slides today are Rasika, Chan Sim Oi, Mikael, which is me, Tang Hao Yuan, and Aprita. What is money laundering? Money laundering is the process of concealing the origin of illegally obtained funds by converting them into what appears to be legitimate income. In other words, it is the act of transforming dirty money into clean money so that criminals can use it freely without attracting from authorities. Without money laundering, many criminals would not be sustainable because criminals would not be safe to spend or invest in their illegal profits. The scale and global impact of money laundering. Money laundering is a massive global issue. It is estimated that between 2% to 5% of our global GDP is laundered every year. This amounts to approximately $2 trillion annually. Such a large financial flow does not only benefit criminals, it also strengthens organized crime networks worldwide and enables further illegal activities such as drug trafficking, corruption, human trafficking, and fraud. Why is money laundering considered a serious issue? Money laundering is considered a serious issue for several reasons. Firstly, it fuels organized crime by allowing criminals to reinvest illegal profits into more criminal operations. Secondly, it distorts the economy by weakening financial systems and creating unfair competition in the market. Thirdly, it undermines public trust in financial institutions and government regulatory bodies. When trust in banks and regulatory bodies system declines, the stability of the entire financial system is at risk. The process of money laundering typically occurs in 3 stages. The first stage is placement, where illegal funds are introduced into the financial system. The second stage is layering, where multiple transactions are carried out to obscure the origin of the money and make it difficult to trace. The final stage is integration, where the funds are reintroduced into the economy as seemingly legitimate assets or investments. At this stage, distinguishing between legal and illegal funds become extremely difficult. And finally, the core principles of money laundering. The core principles of money laundering revolves around blending illegal funds with legitimate financial activities. Criminals may use currency exchanges, wire transfers, asset purchases, or complex account structures to disguise ownership and avoid detection. The ultimate goal is always the same: to remove any visible connection between the money and the original criminal activity.
I'm Rashika. I will be explaining about popular money laundering method that commonly used by criminals. Next one. First one is cash-intensive business. What is cash-intensive business? Cash-intensive business is a business that handles large amount of physical cash daily instead of digital payment. Criminals use cash-intensive business for money laundering because cash transactions are difficult to trace and actual sales or customer number are hard to verify. This makes it easier to hide illegal money within normal business income. Next one. How cash-intensive business laundering money. Criminals add illegal cash gradually into daily business revenue, and then the money is recorded as normal sales income and blend with legit sales income. Example, small increase in cash usually do not raise suspicion. If a restaurant legit income is 10,000 per day, owner may add extra 500 USD of illegal cash. In overtime, the illegal cash can appear as legal income. Next one. Second is casino money laundering. Casino handle large and frequent financial transactions, so large amount of cash attract less suspicious. Illegal cash can be exchanged from casino chips, and these chips later can be converted back into cash. Since gambling outcomes are unpredictable and socially acceptable, the illegal money can be claimed as gambling winning. Next one. This is real example of casino money laundering, the one cover model in Canada. Organized crime group linked to drug trafficking bought billions of dollars into casino in British Columbia. The criminal bought casino chips using bulk cash and play minimal gambling. And later the remaining chips were cashed out as clean fund. Next one. The third one is art-based money laundering. This art market allows high and private transaction. This attract criminal for money laundering. Next, the art price are subjective. It means there is no fixed value for art. Criminal buy artwork for low price and then resell it at inflated price. In this way, the elite fund disguised as legal art investment profit. That's all from me. Thank you.
My name is Tangarian, so we're moving to other methods for laundering money. So let's see the real estate money laundering. Properties are a favorite tool for criminals because they can absorb massive amounts of cash in a single transaction. By purchasing a luxury condo or commercial building with illicit funds and selling it later, the criminal can claim the proceeds as clean investment income. In many cases, banks accept these sales at face value without digging into how the initial purchase was funded. We see this globally, from the recent landmark case in Singapore involving over 200 properties to hotspots like Dubai, London, and New York. Unfortunately, this doesn't just hide money. It also drives up housing prices, making cities less affordable for everyone else. So next is the trade-based money laundering, or TBML. These methods exploit the sheer volume of global commerce. So laundering are misinvoicing to more value, and it happens at trading physical goods across boundaries as in imports or exports. For example, the over-invoicing, the company pays 100 payment for the goods, but only worth 50, and the result will be 50 excess for the launder fund. So here's some of the goods for the money laundering. Most time. So we can see there's agriculture. Commodities like rice, coffee, and soybeans are susceptible to TBML, with criminals exploiting variation in prices. And the textile, the apparel industry is susceptible to TBML, with criminals manipulating the valuation of clothing items during import and export. And the electronics, smartphones, and the computer components are frequently used in TBML due to their global demand. And the last one is pharmaceuticals are valuable and can be easily overvalued or undervalued in trade transactions. Then, next is the mirror trading. So imagine buying a stock in Moscow using rubles and simultaneously selling the exact same stock in London for US dollars. These mirror trading are transactions across borders, bypassing capital controls and traditional banking scrutiny. So a famous example of this occurred between 2011 and to 2015, where Russian clients used this method transferring over USD 10 billion. Then the bank was later fined hundreds of millions of dollars by regulators for anti-money laundering control failures in connection with that activity. So here is the last one, is the shell companies, the core of modern laundering. So by definition, a shell company has no real employees and no active business operations. It's important to note that they aren't illegal. Many businesses use them for legitimate tax planning or corporate structuring. However, in tax havens like Cayman Island or Panama or the Virgin Islands, these are weak supervision, secrecy laws, and anonymous. Then here is some of the method they use. They open anonymous bank accounts, transfer money internationally, create complex ownership and structures, and obscure beneficial ownership. These actions are intended to increase the difficulty of investigation as much as possible. That's all my presentation.
My name is Chan Sim Oi. Today, I will briefly explain the institutional framework for detecting money laundering in Malaysia. In Malaysia, money laundering detection is governed by Primary Anti-Money Laundering, Anti-Terrorism Financing and Proceed of Unlawful Activity Act 2001 or AMLA 2001. This act provides the legal foundation for preventing, detecting, investigating, and prosecuting money laundering and terrorism financing activity. Under AMLA 2001, a wide range of entities are legally classified as reporting institutions. These include not only banks and financial institutions, but also insurance company, money service businesses, lawyers, accountants, company secretaries, casinos, and real estate agents. This is important because money laundering does not happen through banks. It often involves professionals and businesses that can be used to disguise illegal funds as legitimate transaction. In terms of detection and tracing mechanism, the first line of defense is know your customer or KYC. Institutions are required to verify customer identity and understand the nature of their business relationship. They must also maintain proper record of transactions, which allow authority to trace suspicious fund flow over time. When unusual or suspicious transactions are detected, these entities are required to submit suspicious transaction report or STRs. The Bank Negara Malaysia, in addition, organization must implement internal AML compliance program, including staff training, transaction monitoring system, and internal records. Overall, Malaysia institutional framework focus on the combination of legal enforcement, institutional responsibility, and preventive control to reduce the risk of money laundering within the financial system and across key professional sectors. In recent years, Malaysia had increasingly used artificial intelligence technology to strengthen the detection of money laundering. Banks now rely on systems such as automated transaction monitoring, machine learning, and big data analysis to trace financial activity. This system can quickly scan large number of transactions and identify unusual patterns that suggest illegal activity. Compared to manual check, technology allowed for faster and more continuously monitoring. It helps financial institutions detect suspicious behavior early and respond more effectively. However, technology does not replace human judgment. It supports enforcement by making detection more accurate and efficient. Next. In Malaysia, money laundering is treated as a serious offence under Anti-Money Laundering, Anti-Terrorism Financing and Proceeds of Unlawful Activities Act 2001. This act forms a main legal framework for addressing financial crime and preventing the misuse of financial system to conceal or legitimize proceeds derived from unlawful activity. The law empowers the courts to impose strong punitive measures to reflect the seriousness of money laundering offences. This includes imprisonment of up to 15 years or as well as substantial finance penalty amounting to 5 times the value of illegal proceeds or ringgit 5 million, whichever is higher. In more recent case, the court may impose both imprisonment and fines simultaneously. This penalty serves not only as punishment for offender, but also as a deterrent to discourage individual and organization from engaging in financial crime. By imposing heavy custodial and financial consequences, the law aims to reinforce accountability, protect the integrity of Malaysia's financial system, and send a clear message that money laundering will not be tolerated. Next. A clear example of punishment and deterrence under Malaysian law is 1MDB money laundering case, money involving Datuk Sri Najib Razak. In early proceeding, he was convicted for laundering fund linked to 1MDB and sentenced to 12-year imprisonment along with a ringgit 2,210 million fines. This case demonstrates that money laundering carries serious legal consequences and reinforce for principle that no individual, regardless status or position, is above the law. More recently, on 26 December 2025, the High Court delivered a major verdict in 1MDB trial. Najib was found guilty on multiple charges, including 4 counts of abuse of power and 21 counts of money laundering. This conviction related to the misuse of approximate ringgit 2.3 billion in 1MDB fund. In terms of sentencing, the KL High Court imposed a prison term of 15 years and a fine of ringgit 13.5 billion, with the prison sentence ordered to run concurrently. This outcome highlights the seriousness with which Malaysian court treat large-scale financial crime and laundering of illicit funds. Taken together, the 1MDB case serves a powerful illustration of accountability and deterrence in practice. It underscores the government commitment to enforcing anti-money laundering laws and sends a strong signal that even individuals in position of high political authority are subject to the rule of law and will be held responsible for financial misconduct.
Hi, my name is Aprita Kaur and I will talk about public awareness regarding money mules and money laundering. A money mule is a person who allows criminals to use their bank account to move stolen or illegal money. Sometimes people don't even realize they are involved in a crime until their bank account is frozen. For example, a student may receive money in their bank account for an online job and is asked to transfer it somewhere else. The money could be illegal, and without knowing it, the student becomes a money mule. Ordinary people, students, freelancers, and small business owners are common targets. Next, to protect yourself, never rent out your bank account to anyone, never allow someone else to use your ATM card, and also never share your OTP or banking details. These small actions can prevent serious legal and financial problems. Moving on, there are several ways we can protect ourselves. First, verify before you act. Never allow third parties to use your bank account or personal documents for transactions. Second, be cautious online. Avoid suspicious jobs, offers, or investments schemes that promise quick and easy money. Third, educate yourself. Understanding how money laundering works helps you recognize warning signs. Finally, report suspicious activity. If something seems unusual, inform your bank or the authorities immediately. In conclusion, money laundering affects everyone. It supports criminal activities and damages the economy. Awareness and vigilance are our first defense. By staying informed and careful, we can protect ourselves and help prevent financial crimes. Thank you.